Hey, Dan Passarelli here. Well, we got a big day tomorrow. What's big about tomorrow? Well, a couple things. I mean, first of all, the one thing we could possibly get word from the SEC if they will approve a Bitcoin ETF, which is going to be big news in the crypto world, despite the fact that there was an erroneous tweet yesterday. Apparently, the SEC's website was hacked into, and the hackers tweeted that they did approve an ETF, and that caused some confusion. But that's here nor there. That's big news for the crypto space. But the big news for the market is tomorrow we have got CPI being announced. We've got a Fed speaker. We have got the weekly unemployment figures. That is a trifecta of setting the tone here. And then Friday, we have PPI coming out. Now, CPI and PPI aren't the Fed's number one most important inflation indicators, but hey, they're up there. Now, what's important about this is a time in the market, I would say more than any I can remember, where there's been such a big disparity among thought leaders as to what might happen with the economy and with interest rates and such. Now, the next Fed meeting is going to be January 31st, and it's widely expected rates will hold the same. Skip forward 2 Fed meetings to May 1st, and the federal funds contract at the CME Group is factoring in a 53% chance of interest rates being 50 basis points lower. That's 2 25-point cuts. Now, that's a big deal. That seems to be towards the more aggressive side of what I'm reading about what a lot of the thought leaders are thinking. What exactly is the Fed funds contract at the CME Group? It is a futures contract that has a fair amount of volume that professionals in the finance world, they'll use those contracts to hedge big positions, not just to make bets on what they think is going to happen, but to hedge massive positions that may relate to treasury investments or such that they have. And that means that that's what, that is really the best gauge of what professionals are thinking. So here's what I'm thinking. Tomorrow, if inflation ends up going back in the wrong direction, if there's a lot more inflation than expected, then we could see this market sell off really, really hard. If there's a lot less inflation than expected, we can see this market rally super hard. If it's in the middle, then, whatever. Friday's number is likely to pretty much follow Thursday's number somewhat with some, moderate disparities. And the Thursday unemployment also, that's going to be important as well. Not quite as important as the inflation numbers, but it's also pretty important in what the Fed says about these numbers. So, the next couple of days this week, I think is going to be pretty pinnacle. But let's look at SPY. We have seen sort of this oscillation in a comparatively smaller range than we saw. We've got the VIX down back below 13, which is pretty low. And actually, let's look at a chart of the VIX really quick. I mean, there's just a lot to look at and a lot to think about right now. We're not at, and let's pull this up to 3-year chart. We're not down to the 3-year bottom again, but we're pretty darn close to it. One could maybe argue that there's support at where we are right now, and this was just sort of a month-long anomaly. One could argue that. So this is it. There's big news coming out, and that's going to be good for option traders either way. Just keep your positions small, be nimble, be ready to cut your losses fast if things go against you, and milk those winners for everything you can, and strap in. Could be good trading for the next few weeks. This is Dan Passarelli, Trade Smart.